we could actually consider what if before every trade, we think about this is the only funded evaluation account that I'm allowed to trade for the next month. No resets. This is it. I have to make it or break it. I am allowed this account. Treat it as if it's $50,000 or $10,000 or whatever amount of sum of money is really a big deal. And then say, this is my budget for my trading. And so I need to be real freaking careful and trade a few micros and trade only my best setups and not rely on resets all the time, not rely on new evals and having backup accounts. And if I blow this one, I get another one. So in that situation, if you have that mind frame, then we get to ask ourselves every time, do I still take this trade?
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
All right, prop day traders. Today we're going to talk about one central key idea in our space of day trading the stock market with prop funding accounts. Question is, if you knew you could not reset, rebuy, or start another prop trading funding account tomorrow, would you take the trade you're about to take? Have you guys ever thought about that? It's a very interesting question because I think it has changed the way we perceive risk trading prop funding accounts. And it's something to think about because we want to make sure that we are coming to our trading business with the best possible setup and mind frame and approach and ability to be profitable long term and grow our trading business into scalable, multiple zeros on the end figures into the future. And so the habits that we're creating now really need to be the habits that we want as we approach next levels in trading. And so I'm wondering, I think that this question is important to talk about because I do trade prop funding accounts. I trade, and I live stream with Blue Sky Prop Trading Company. And I really believe that they are a great company and very supportive. But I think that there's a psychological element that needs to be discussed with these because our cheap trading accounts quietly teaching us damaging trading habits. You know what I mean? Are they making us worse traders because of the opportunity and the way that we can approach the resets, And I don't think the prop firms are the problem. I don't think that they are. I think the danger is allowing that easy access to replaceable accounts and capital to change the way we respect money and capital, risk, patience, failure, success. I think it's skewing all of it. And I want to just kind of crack that wide open and think about it in a way that maybe you haven't before and that I hadn't before really and deeply enough thought about as a trader in my own journey and how I want to make sure that I'm always paying attention to that factor because the whole idea of I can always just get another one, it's frustrating, but it was only this fee. I can reset. That's beautiful, but there's a risk with that, right? I think the modern future environment is actually kind of wild. When we first started trading, back before prop funding companies were really out there, historically, blowing an account when it was your trading money meant something significantly different than what it does now. You lost your hard-earned money. A lot of times you'd work a day job as an early trader to fund your trading account, and that was your real money. That came out of savings, that came out of credit or what have you. And when that was gone, that was a big deal. It wasn't a fee. It wasn't a button to reset. It wasn't a $39.99 fee for another 50K evaluation within minutes, right? It was a big deal. So now, depending on the prop environment, psychologically, it can feel more like, blue account. God dang it, I hate that I do that. I got to buy another one and start again, start fresh tomorrow, start fresh at power hour, even same day. And so I do think it's important to ask, has that easy access to another account unintentionally made some of us less careful with the account we already have? You know what I mean? It's an important distinction because this isn't an anti-prop firm episode or conversation because I am a prop firm trader and I believe in the benefit that they provide to us. And I think it's something that is unprecedented in years past and it's such a blessing for us all as traders. And I'm so thankful for them. But I do want to think about while they create a ton of opportunity for us traders that we might have not otherwise had access to, right? It does bring the barrier to entry to day trading way down because it's the cost of a fee, right? It's cost of a reasonable fee. That's not so different from just a meal out these days for one person even. And so, we're getting meaningful trading capital for a very reasonable nominal fee, which is how I trade most of my trades. But every system that has incentives, oftentimes there's also like a different side of that, another factor to consider. And I think it's easy to not think about it, right? To just think about how we show up and that how we're safe and that we can not carry the full risk of our accounts. But as traders, we need to understand how those incentives do affect our psychology. I don't know if you guys have, but have you ever taken a trade differently because somewhere in the back of your mind, you know the account is replaceable, right? We know that, if this trade, if this, I could just go in heavy and worst case scenario, it's one account or a couple accounts if I'm copying, has to be reset. Worst case. That if you've traded a prop funding account, you've had that thought. Let's be real. Everyone be real with me. I think that it's a real situation that when you're trading an account that is not fully every single dollar is funded by you, when it's a fee, we think about trades sometimes a little bit differently. So let's think about it this way. Humans behave differently around something that we perceive as scarce versus something that we perceive as replaceable. So imagine, let's just break this down and make it real. Imagine having a $10,000 of our personal savings that you have worked for a long time and saved up for this advantage, for this opportunity that trading is. And you're going to go all in and really learn and study and understand and turn your $10,000 into a lot more. So you move that money from your personal savings account into a brokerage account. You're going to treat it a certain kind of way, right? Now compare that emotionally with the 50K eval that cost a relatively small fee, $30. So obviously $10,000 of your savings for years versus $30 fee, those are not economically equivalent. But your trading platform can make them feel surprisingly similar. The screen says 50,000, yet somewhere in your brain, if this goes badly, I just get to buy another account. Like I'm okay. I'm safe. I'm not risking 50,000. I'm risking $30 in a few days. That subtly affects behavior. So maybe you give one more trade a chance. You size a little bit bigger because like worst case scenario is not that bad. As you're getting closer to drawdown, maybe you're just like you give less Fs into how the outcome of the trade goes because you don't have your full drawdown back. So you're not as protective of the money that you have in there. And so you might take a trade that you normally wouldn't and keep going after you hit a soft personal daily loss limit that you didn't have in place and it didn't automatically lock you out. Or that YOLO energy that we're talking about, you only live once, when you just kind of go balls to the walls and like you see what you can make out of the trading opportunity. If the account's blown, the account's blown, like there's opportunity to reset. None of those decisions necessarily feels reckless in each moment, right? For every trade, for every like little session within the grand scheme of our trading opportunity. But that's why it's so dangerous too, because that risk erosion kind of tends to happen in one tiny little permission at a time. When we give ourselves these little permissions here and there to just let this one little bad habit slide in, because it's not really our money, right? It's just a fee and we're trying to get better and it's like contained, right? But I do think that when the account becomes disposable, the discipline can become disposable with it. And that, you guys, is so dangerous to consider our discipline and how we want to behave as traders as optional because it doesn't really matter. I think part of that is also, right, like our brains are being programmed differently. There's such a fast-paced online world of bright, flashy colors, like something if you're scrolling reels or whatever, it has to catch your attention within 1 second for you to stay on that reel is what the current evidence shows, which is bananas. Because how is a unique content creator? That's a wild situation. But like also video games, right? There's a ton of people who are traders who are video games. And it's very interesting to think about that analogy because in a video game, right, you die, you restart, you have more hearts. You die, another heart is used, you restart. You can go to this place and get 10 more hearts, and then you die, and then you restart, and you fight this boss, 50 times until you finally beat this boss. It's not a big deal. It's just a reset. So the death doesn't carry that much emotional weight because you've learned that there's just another life waiting, right? It's not, of course, the video game's not like real life death, but that sort of like reset part of our brain where it's like, meh, like what else? Like next, I can just use another heart. I've got a ton of hearts waiting. I know where to get all the hearts I need. Prop trading can accidentally kind of create a similar psychological loop of like, it's an evaluation. I went into drawdown and then it blew. I'm going to reset. I'm going to get another one. I'm going to try this with the prop funding company. I'm going to try theirs and see if their rules, if maybe it's their rules, right? It's not my trading. It's the rules of the prop company. And to some degree, that's true because there are some sketch ones out there that really misbehave in their opportunity. But that cycle of eval, drawdown, blown, reset, eval, drawdown, blown, buy a new one. The trader can get really good at restarting accounts without necessarily getting better at keeping accounts, right? And there's the part of it, like if you can get it through to a payout, that's great. You're making progress. You're extending the life of those accounts. And so you have opportunity compounding, right? And so that is good when you can start to make the accounts hold and last for longer and longer. But it's an important distinction because passing evaluations and becoming a sustainable trader are not necessarily the same skill, right? Because passing an evaluation just gets you to the next phase, but holding an account long term for weeks to months and getting payouts and getting another payout and keeping your drawdown light, that is a skill that we need to be striving for to be utilizing the prop funding accounts to our maximum benefit, not necessarily the prop funding company's maximum benefit because they don't get as many reset fees. So that should be the goal, not necessarily of like, well, we'll just see if this trade works. And if we go full size, we can pass this eval faster. But just going like big size on evals is not necessarily training your brain with the sort of consistency, base hits, smart trades that really kind of creates a very strong, consistently profitable trader. And so passing an eval often rewards aggression over a pretty short period. Whereas long-term trading rewards like survival and consistency and honoring a daily loss limit and letting the accounts build and grow. And so those are kind of conflicting, like one of them is aggressive and fast and it's fine. It's not a big deal. If I reset, I'm going to just go again versus like, I want to keep my risk reasonable and I want to stop trading that account if I get to a certain drawdown for that given day, because I want to be a trader who can build my accounts up over time and let it really matter. And so that's sort of like a different situation in trading where we have to manage all of the different opportunities within it. So there's different ways to approach prop trading accounts, right? One of them is how quickly can I hit the target? How quickly can I get to my, passing this account? Say for a 50K account, a lot of them you need to hit 30K in profit. So some of them are 1 day pass, you go for that 30K. Some of them are 2 day pass, you go for 1,500 and then you pass it in 2 days. So how much can I make today? How much do I need? Can I pass this thing by Friday? I'm already near the drawdown anyway. Screw this one. I'll just get another one. I just need one NQ runner and then I'll like handle it. I'll get to my target faster. That's just kind of like all at it. Like everything is to pass this eval as fast as possible. But there's another trader who's got a little bit different mindset, arguably a little bit more professional, right? So when you're approaching trading from the second perspective, it's more like, is this my best setup? How much am I willing to risk on this trade opportunity in this situation? Where is my trade wrong? And so I need to not be in this trade anymore. Does today's market even deserve my capital? Are these conditions favoring my edge? What happens if I just don't trade today because I'm not feeling it, because I'm distracted, because I want to honor the risk that this game is and only show up when I'm at my A game and I'm ready to execute my fullest capability? So that professional trader isn't trying to finish that level, right? Isn't trying to just knock out that eval and get it in the queue for next level. They're trying to stay in business. They're trying to grow a trading strategy and approach and energy that is sustainable long term and treats the risk as if it's a big deal. So it's a great way to think about how you're training yourself into what kind of trader you want to be, because the goal isn't to become really good at passing prop evals, right? Our goal should be to become the type of trader who can keep a full, robust personal account and grow over time and make it work for us, right? And so there's a different approach to that. Now, here's something else to think about with this, because have you guys ever been in the situation where your account is in drawdown and you're only maybe $400 or $500 from blowing the account? So this is where it's not really $400 or $500 anymore. This is where we approach it as this account's pretty much dead, right? This account's almost blown. It's practically blown. I got one trade left. It's a Hail Mary. It's fine. I might as well go for it. Like you just kind of throw caution to the wind and you just take whatever maybe trade is out there, because it's either going to throw you into profit or it's going to end the pain on that one and you reset. It's very interesting psychologically, because if it was like $500 of your real money, say you got a paycheck from a job that you worked at, many hours this week, and it was $1,000, half of that paycheck is $500. And that would be treated differently by you, right? Like that is you're paying your phone bill and your insurance and you're buying your groceries for the week. So that is valuable and you need to use that resource wisely. But in a prop account that is already in drawdown and is not nearest to the opportunity of passing, we've kind of mentally labeled that account as basically dead. So it's not worth protecting. So that's a sunk cost. It's house money. It's not even a real account anymore. It's like you can just kind of see what happens with it because you're kind of over it already. It's kind of like a mixed up with desperation and effort mode, right? But why, right? Psychologically, why does that last $500 deserve less discipline and attention and energy than the first $500? Than when the account is fresh and you're trying to keep it robust and full and not go less than $500 lost in a day, maybe.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply.
One for starting your day with calm intention, one to stay centered while you trade, and one to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description. So that's a way to kind of check ourselves, right? So if we are trying to really be professional traders, our response theoretically should be the same with every trade. It shouldn't matter how much is left in drawdown in the account, but rather so, is this an A plus opportunity? Is the risk appropriate for how I trade and what is presenting on the charts right now? And if it's not, then I don't have a trade. There shouldn't be a reason to put my capital on, whether it's my first $500 or my last $500 or it's my personal account, The account balance shouldn't determine the quality threshold of the setup. And that, like, thinking about this for this episode, I was like, dang, like, I really need to make sure I'm always doing that. Like, it shouldn't matter where my account is at. Like, I do, like, if there's only $200, it would matter the size that I use. But in general, I shouldn't engage in any trade no matter how much money is in my account, whether it's like full up or it's down low, because I want to make sure I'm training the habits that are the most successful long term, because that's the trader that I'm trying to develop into. And that's like a really strong psychological approach to it. And I do think that there's more like, how could we have the strongest psychology with being a prop funding day trader? Because the opportunity is amazing to be in the prop trading space. Like, the opportunity they provide to us is incredible. And I truly believe that I'm so grateful for it, because it helps, like, I don't have to put my family savings on the line for my trading. I do get to use fees and I do get to take payouts, and it's great. But I want my psychology to be stronger. I want it to be stronger than the quick reset of it. And so I want to think about having a new approach to being steady and not worrying about my drawdown, but I want to be fresh every time. I don't want a reset to mean that I just get to have whatever habits I want. A fresh start is available around every corner. It doesn't matter if I really behaved badly this morning, this afternoon, I'm going to behave differently. That's not really how it works with habits. More so, if you have the habit where sometimes you give into this revenge trading, oversizing, throwing full port at the wall, then that's a habit that you'll have. And so that the danger with that, right, is that you do pass the evals and you get to live accounts, you get to funded accounts, you get to the place where you get to take payouts, and those habits are a part of how you trade. And so that's where you can blow your prop accounts, your real funded accounts. Or when you get into live, you can blow them. And so the impatience that killed your evals, or the revenge trading that killed your evals, or the over leveraging that killed your evals, the over trading, the shiny new accounts, all of those behaviors that you were loose with in the eval phase, and going to funded account doesn't change the fact that those are behaviors that you exuded. And so that's pretty risky, right, as traders? So instead of asking like, I'll just reset. Should I reset? I probably just get a new account. I think we need to instead try and think about, what behaviors am I doing that are going to stay with me as a trader? Because ideally, we're all passing our prop accounts and we're getting to the funded stage and we're getting to the payouts. So if that is where we're headed, what behaviors do we want to bring with us, right? Is it the YOLO, F it, over trading, whatever, as long as I pass this eval energy? Or is it I only trade A plus setups when the conditions favor my edge? Because I think we all know, right? When you say it like that, it's obvious who we want to be as traders and what's the most sustainable choice. But the reset fees is just such a part of the culture these days that it's kind of dangerous, right? Because repeatedly funding the exact same psychological problem means you're going to be in that rat race of resetting evals and sim funded accounts for years, until finally you're just so freaking exhausted of it that maybe that's when you become the quit. And maybe our metric shift, that everybody doesn't quit in the first couple of months because we're not blowing all of our savings account. Maybe you quit a couple of years after blowing 30% of your paycheck for a few years, and your family finally just being like, what the hell, just work your job so that we have money. You know what I mean? And so that's where our behaviors that we're training in this game are such a big deal. So how do we shift that if we're been stuck in this like race of like eval, drawdown, blow it, reset? So here's something to think about, right? We could actually consider, what if before every trade we think about, this is the only funded evaluation count that I'm allowed to trade for the next month. No resets. This is it. I have to make it or break it. I am allowed this account. Treat it as if it's $50,000 or $10,000 or whatever amount of sum of money is really a big deal. And then say, this is my budget for my trading. And so I need to be real freaking careful and trade a few micros and trade only my best setups, and not rely on resets all the time, not rely on new evals and having backup accounts. And if I blow this one, I get another one. So in that situation, if you have that mind frame, then we get to ask ourselves every time, do I still take this trade? Is this trade worth my capital? Is it worth my energy? and potentially damaging this account. And maybe I don't have account for the next 2 weeks, because if this is my account for this month, I gotta like hold it together and make really good trades and be very cognizant of where I'm putting my risk, because that question, that approach could instantly eliminate a surprising number of trades, right? Like there's so many F it and find out trades that a lot of prop day traders would not do anymore if they recognize that these accounts shouldn't be as disposable as they are. So that's sort of like a way we could filter our thoughts and our approach to trading, a quick pre-trade conversations with ourselves of, is this my best setup? Is the risk appropriate? Would I take this if it were my own capital? If this were my real money funded account, is this a really good trade opportunity with this size? Would I take it if I couldn't replace this account? So if those answers change when you're thinking about it, then you want to maybe reassess how you're taking your trading. It should be a part of the equation and how we're thinking about our trades, because we need to deal with our risk tolerance in a certain way that is sustainable for the long term. I think it like I want to be a trader for 20 more years plus 20, 30, 40 years, because I want to keep my mind sharp. I want to understand capital. I want to make life-changing money and like have that trickle down through my generations of my children, etc. And so I need to make sure that I'm having the steadiest habits that are following me in my trading career. And I know that the opportunity of the quick, easy resets is something psychologically that changes how I deal with my trading as well. And so making, in my mind, blowing an account expensive behaviorally is going to help me. So it doesn't necessarily mean that I'm taking a more financial expense, but instead I want to try and create some friction in my mind between all of the trades that I might consider putting something behind, because just blowing an account and resetting shouldn't be the cycle that we're just comfortable in. So part of that could be a way to like try and reframe that, if this is something you're going through too, is if you blow a count, don't allow yourself to reset it right away. Don't allow yourself to buy a new one right away. Have some sort of a rule. And depending on your psychology with it, it could be no more today. It could be I need to take tomorrow off because I need to figure out how I got it this bad. And if I was playing some F around and find out trades in there that really were not the trader that I'm trying to become. And so it could be that you have a rule of 48 hours. I don't get to buy a new account because I'm treating this haphazardly without a true respect of my risk. And so then I'm not being a good risk manager. And if we consider day trading first and foremost, we're risk managers and then the profits follow, then that approach means that we need to take it seriously when we cause some damage to our account growth. And so in that situation, if you're going to take a time off of constantly resetting your accounts, you can use that time valuably. You still get to be a trader, but instead you can review the trades that you took and the behaviors that you exuded, screenshot even what happened and make some notes on it. That way the lessons sink in deeper and make the choices lessons, so that we can, for the goal of like not feeling shame or like bad about ourselves, because fuck shame, like that's not the way to trade. We need to give ourselves grace. But in order to make it matter, right? In order to make the lesson make us stronger traders. And so we want to identify where we're breaking the rules, where we're throwing caution to the wind, if there's a cycle of like what time it is or what behaviors, who you're around when you're making these choices, and try to identify what decisions are creating the spiral of the not healthy behaviors that potentially you're engaging in. Because usually the account that is lost is not resulted from one trade. I mean, sometimes it is. In that situation, you're probably over leveraging or in giving too much risk, or just not even playing with a stop loss, just throwing in a directional order, obviously, and then just either it wins or it loses. And that's a gamble, right? It's not necessarily a trade because you're not identifying your risk. And I guess maybe you are identifying risk, right? You're just saying it's the cost of this account. Either this account hits my profit target or it's done and I reset. But is that like a good habit? You know what I mean? Like I would argue for myself too, because I've done that as well. Like I think everyone who trades prop has had that moment, right? But then we want to ask ourselves, like, is that the way we want to approach our risk? And is that a healthy, sustainable choice moving forward? Because what if you do? I mean, isn't the goal to like build up a strong account and trade your capital and respect that risk and always make sure you're managing your downside and treating it as a profession? And so we have to kind of drill into the consequences and what they could mean for the long term and recognize that the habits that we're behaving as now are creating how fast we succeed and what that looks like for us. I think that real failure, you know, is a situation that happens to various degrees to different people. And none of this experience that we're going through as traders can be invaluable, right? All of it can be teaching us lessons. And so if you are in this like loop with trading prop accounts and having those habits just sneak in because you're like, nah, I can get another account for $30, for $80, depending on which route you go. Like it's so disposable that I do think that creating disposable discipline is such a problem. And I think if we all could like try and wrap our brains around future traders profession needs to be called into the current, we need to treat it differently. So I think that we want to be thankful. I at least am going to continuously remain thankful for the prop funding companies. The opportunity that provide is massive. Like you guys know, I'm market mamas, right? I'm a mama to 3 kids, and we have tons of expenses in our house. You have 3 children this day and age. Oh my gosh, right? There's school expenses. There is clothing. There's food. There's all the things that they need for their little lives. Not to mention, what we need for our home in general. And so life is expensive. And so I absolutely am so thankful for the opportunity that prop funding accounts offer to day traders, but I want to be in this game a long time, and I want my habits to be the driving force for the strong trader that I am. So the solution isn't really leading prop firms. They're not the problem. More so, they make it easier to have these dangerous habits. But no, recognizing if you have these habits, and that might be a factor, maybe we can reframe how we think about it, right? Our mindset around prop accounts. And so if we can learn to respect that rented capital essentially and treat it as if it was a little more scarce than it is, then I think that we can have a stronger approach to our choices and our habits that we're bringing to it. Because ultimately, we're training something way more valuable than every account is worth. We're training the trader that we're trying to be long term. And so every time we have to say, I'll just reset. It's fine. I can just reset. It's not that much money that I've lost. I think we should each ask ourselves, like, am I resetting an account? And it's fine. And I need to just brush this under the rug. It was just a day. Are you avoiding a lesson that experience could be teaching us to make us a stronger trader? I think that there's lessons in like every day as a trader. For maybe it's like you really nailed your setup, and like that is a lesson that the setup is really good, especially in this market condition. And it worked really well today. What, how, and why? But on the days where we struggled, how do we struggle? And so an account reset is an opportunity to revisit the lessons that we could have experienced in the way that account lost its life. And so I think we ought to consider that, is what I'm saying, is that make that when you have to reset your account, at least pause, right? And think about the lessons that could be taken from that so that maybe the next one can last a little bit longer and you can start stretching this out and considering them a little more scarce than what we currently do. Because I think that the trader who constantly needs more accounts, maybe you don't need another account. Maybe we need to understand why we're not protecting them, because our goal isn't to become really great at resetting them. Instead, our goal should be to become incredible at staying in the game and being that sustainable long-term trader that gets to have the accounts that grow and prosper. And we get to take out max payouts and figure out what happens when we're moved to live. Because that is, new level, new devil. It's a new stage in the game where we have to learn how to progress because we were having that consistent outcome. And that's like the goal, right? Because every account doesn't need to be treated like it's nothing. Instead, the accounts need to be treated as a resource that we are thankful for and appreciative and are not trying to waste. Because the bigger deal of it is the habits that we're building on this account will follow us into every account that comes next. And whether that's your sim funded account, whether that's your live account, whether it's your personal finances down the line, those habits are who we are creating as a trader. And so, I love me a prop funding company, and I want to love the trader that I'm developing into. And so I need to make sure that I'm really respecting my capital and every dollar, whether or not it's within a prop funding account or not. And I guess that's just the conversation that I wanted to come with you guys today, because it's really, the prop funding world has blown up and we see like really fancy numbers from a lot of traders out there, the numbers that they're throwing down with these, but there's an approach to trading these accounts, and there are healthy approaches and there are dangerous ones. And I think anyone who trains a prop funding account should just take a little pause and like think about the habits that are getting us through this game, and the ones that are really strong we should keep, and the ones that are risky we should try to manage them more effectively if we really want to get to that consistently profitable, not having tons of resets phase of trading. So cheers to that, for me, for you, for us. And if you're a day trader, if you're a future trader, if you're a prop trader, show me some love. Like, us a note in the comment. I have been in this podcasting world for a couple of years now, talking about all kinds of things, psychology, and I really just am very real with you guys. And I would love some feedback. So like and subscribe. Share this with a friend if they're trading prop accounts and they're maybe a little bit reckless with it. Let's just all have a little bit of a pause in our lives and reset and think about what the risk really is and how maybe we could approach it with our most effective selves to get to that more effective, more profitable place that we're all heading towards. So cheers to that. And I wish us all the best, most stable and sustainable trading of our lives in our near future. So take care, everyone. Bye.